Hello, it's Brian Shannon from Alpha Trends here. Today is Monday, the 12th of September, 2011. Let's go ahead and take a look at these markets. We had another wild day in the market, and what we're going to do is take a look at the Realtick charts here. The charts and the platform that I trade on are Realtick, so check them out at realtick.com. They sponsor this show each Monday, and they have a great product I've been using for close to 10 years, I'd say. Anyways, the S&P 500, we're still seeing quite a bit of volatility in here. We started the day with a gap lower, and it was looking rather ugly at the time. If we saw, the gap from Friday's close was pretty significant. We had a strong rally right away from it, and then just a lot of back and forth chopping action. Let's take a look at the 1 minute time frame, and then we had the news of China, regarding Italy debt. So apparently, people were at least motivated to cover some shorts in there, and maybe some natural buying as well. But if we take a look, we're still below a declining 5-day moving average. We still have this trend line we could look at. We did see what we were kind of the scenario we're outlining last Friday occur, which was a break of this trend line and then some strength that might last a couple of days before it declines. So the break of the trend line and then a pullback down towards the 114 level, which is where we did hold, and that was we were talking about 114 to 114 and a half. So this 114 level is what we'll just call it right now, is where we would want to see today's low. Actually was 114.05, but we'll call it 114. If 114 is given up here in the next few days, that's when it should get more interesting to the downside, and people will be talking about this bear flag being completed. And again, it's not the breaking necessarily of a trend line, but that you want to take your action on. But what's the subsequent action? The market did come down and did hold some of these levels of support, which is why our analysis always has to be multidimensional. We can't just look at simply a trend line or just one time frame and make our conclusions based on that. The weekly chart is still a mess and still projects that it's likely that we're going to see lower prices. If, however, it reverses back up and somehow we enter a new bull market, which doesn't seem likely, then the market's going to tell us that, and we're going to know that we don't want to be short, obviously, when we have these types of rallies, and to stand aside until things make more sense. And right now, not just today, but the last couple of weeks, really, we've just seen this real incredible volatility with a lot of gaps. I mean, you can't even see today's gap, but it was significant there. So it is a rough environment to have an opinion and hold on to that opinion for a very long period of time. The Nasdaq came down and tested its trend line. We'll take a look at that right here. It tested and kind of held that trend line and did bounce from there. We do still have this descending trend line as well. I'm not sure that will come into play here in the next couple days because it is, up near about 55. But the daily chart of the S&P, I'm sorry, the Nasdaq here remains a mess. It's just a lot of back and forth choppy action. We do have that range kind of tightening in there. Let's see if it breaks that direction in either way. But we still see the same themes throughout these markets, which is just a whole bunch of indecision. Before we hit that trend line, there's potential for resistance up near about 54.40, which is a level that we had dealt with recently. 54 to 53. I'm sorry, 54.30 to 54.40 is really a potential level of resistance. Russell 2000 is still a mess, obviously, as well. This 66 level was the bigger level that we wanted to see hold for the Russell, and we didn't get down to that. The low today was actually 66.37, so we came pretty close. But 66 is really the key level for the intermediate term, I would say, for the Russell 2000. We have this trend line which held for now, and it doesn't make it bullish though. Just holding a trend line doesn't create a bullish environment. We're seeing in all of these markets the best case scenario that we can make right now is that we're turning neutral and we're correcting through time, and we can rebuild and head higher from here. But with the primary trend on the weekly time frame as badly damaged as it is, these aren't the type of bases that good rallies come from. We need much more time to consolidate. The semiconductors were up a couple percent here today, which is interesting. They've been kind of more neutral than the rest of the market. Actually, they're the one group that did make a lower low last week, and we have right now, the market still. What we've been talking about really is how it's been kind of range bound. Excuse me, like the financials have as well. But the semiconductors have been kind of bouncing around near this 2850 level, being the kind of the midpoint of this range. And we do have these lower highs in here, so we're coming up to and testing this trend line. I don't think breaking the trend line necessarily means we're going to get a reversal higher, but we get a higher high in here, then maybe you could start experimenting on the long side with stops just below this higher low right here at about $28 a share. So the semiconductors, they're showing a little bit better neutrality, but again, being neutral with a declining 50-day moving average is very difficult to trust in these rallies. If we see a rally emerge, it would be worth attempting to take a trade on the long side, but not with conviction. We can't trust them when we have a declining 50-day moving average as we do right now. And the 100-day, the 200-day, they're all declining as well. The financials got down to the low end of their range, and didn't match the low the absolute low, but 12 is the general area of support in resistance up at 1340. Basically that's been the range, 12 to 1340. We got down to the bottom end of the range, and this is where it bounced once again. I think that if you see the financials bounce a little bit further, maybe they get up towards that 10 and 20-day moving average and then begin to drift lower. If they do that here in the next few days and then break back below 12, then I think things could get ugly once again. So the situation remains dynamic price-wise, and obviously news-wise, which has been the real catalyst here lately, is this global economic news, and it continues to drive home the point that we have to be flexible, and we have to be open-minded and not get stuck with one opinion for too long, because things can change very rapidly.